Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards, with your host, Mel Blackmore.
If you're listening to this podcast, then you're in great company. We've got thousands of listeners who have a thirst for continuous improvement and raising standards in business. Whether your interest is in quality, sustainability, or risk standards, I'd love to welcome you as a member to our online platform for all things ISO, the ISology Hub. The ISology Hub is the leading place to get access to all of your online resources, from in-depth training courses through to our very popular coffee break training, to templates and action plans and many other resources to help raise standards. As a member, you get access to over 100 courses, taking you from learner to practitioner to leader. The ISology Hub has all the resources that you need, which will really help to make your life easier and to help improve compliance in those business critical areas. So if you'd like access to learning and compliance resources ranging from data privacy to environmental management, anti-bribery, business continuity, quality, health and safety, to name just but a few, the list is endless actually, then we'd love for you to come and join us. Just head over to the isologyhub.com. Hi, and welcome back to the ISO Show. Well, in the last episode, I was joined by Jay Ruckelshaus, who's the co-founder and head of policy and partnerships at Gravity, which is a carbon and energy management platform. Well, I'm delighted to welcome Jay back, the second part in our three-part series, all about taking the carbon accounting from platform to proof. So welcome back, Jay.
Thanks so much, Mel. Excited for the next topic.
Yeah, I think the last episode was a great segue into what we're going to be covering today, which is all about how carbon accounting software and verification work together for climate compliance. So if any of our podcast listeners didn't catch the previous episode, I'd definitely recommend going back and listening to that, because that's going to provide some context for this episode today. So an awful lot of people perceive carbon accounting to be a complex challenge. It isn't necessarily something that was done 20 years ago or even a decade ago, but it's becoming more and more commonplace across organisations that are actually getting serious about their journey towards net zero. And in the previous episode, we talked about the drivers and the business value around carbon accounting and carbon reporting. So what we're going to be looking at specifically today is understanding that link and the connection, because there are more businesses that are, again, taking this seriously. We've spoken in the last episode about many organisations having CSOs, so Chief Sustainability Officers. So it's now a feature in terms of roles, responsibilities and accountabilities in that C-suite. We're seeing that more and more across organisations, not just in the UK, but globally, which is absolutely fantastic. So although that may seem as, very challenging in terms of carbon accounting, a lot of organisations are going down the software route. So, Jay, what would you say is the role of carbon accounting platforms and providers, and how does carbon accounting software help to overcome the challenge that organisations are facing today?
It's a great question because, as you say, we talk with a lot of companies who either have done this for a while and know firsthand how historically challenging, just from a data and a calculation and auditability perspective, carbon accounting or measuring greenhouse gas emissions has been, but maybe doubly so for those who are just getting started and who maybe are swept up in the new regulatory trends or asked by their investors or customers or otherwise. And so we're definitely used to getting folks, first confident in the fact that there's some tools out there that can help them make this a bit easier. And I think there's a couple main roles come to mind, especially when we think about not only measurement and reporting for their own sake, but doing so from a verified and assured perspective. And so I think one of them is just getting on top of all the disaggregated data that often lives in various business systems at customers' operations, from accounting or AP systems and ERP systems and logistics and business travel even, and utility and fuel information. It can be a little overwhelming, but importantly, doing so, aggregating that data, putting it where it needs to go, doing the calculations, but always maintaining that crucial trail of where did this information come from? What is the source transparency? Understanding the documentation behind every data point is a really important angle on what carbon accounting platforms or software should be doing. The other big piece is really the whole audit trail and kind of event history logging of the actual calculations themselves. And I think if anything's ever a black box or kind of send it away and then it comes back and we're not sure how the math was done, that's always a bit of a flag that there might be an opportunity for much more rigorous trails of where this stuff comes from. And not from a pedantic, kind of evidence for evidence sake's perspective, but really because this is what's required now to pass the audit or the verification procedure for carbon emissions, for sustainability data, which, as you noted, is a really remarkable trend in sustainability space in the past couple of years, is the real kind of emerging best practice, in many cases requirement for different regulatory perspectives, to have sustainability data assured the same level as financial data is a remarkable change. And unfortunately, there's tools to help companies kind of meet that new challenge.
Yeah, I think that there is a growing demand to help to be able to demonstrate trust through being able to evidence, the methodology. You mentioned it obviously about being able to go back and retrace, the calculations, for example. So that traceability is becoming more and more important. So how did you actually get to that figure? So being able to be completely transparent when it comes to methodology in terms of how do you actually get to that number, I think that's crucial, especially with organizations that you will have sites across, multiple countries across the globe, and they may have different types of calculations in terms of conversion factors. So
Mm-hmm.
again, that all needs to be taken into consideration and made completely transparent into, which countries' conversion factors are we using and how does that all tie together? How do we align that at a global level? I think that can be quite confusing for a lot of organizations. And
Mm-hmm.
I think when you actually break it down, it's not that complicated. But being able to demonstrate that, I would think that it would be a lot easier if you have access to it, at the click of a button with the software, as opposed to going and trawling through lots of Excel spreadsheets, for example.
It's a great point, just the notion of scale. If it's just one calculation, maybe not the end of the world to kind of follow the steps of both the paper trail of source documentation and then, as you note, how was that actually converted into emissions and the kind of math there. But the reality is most businesses have, tens, hundreds, sometimes millions of lines of calculations in a carbon footprint. And so how do you really at scale, even just something as, isolated as electricity, as you noted, very different calculations depending on the grid cleanliness and where your facilities are throughout the globe. And so that really ends up being historically a bigger challenge that tools can make easier.
So I think, for those of our listeners that may still be using Excel spreadsheets, this might be a very simple question for you, but it's one that I think is really important to unpack, and that's to help our listeners that may be looking at transitioning from Excel spreadsheets over to a platform for carbon accounting. How does the carbon accounting software work? So what's the key difference really between going from Excel spreadsheets to carbon accounting software? So just wondered if you could try and unpack that for me, please. I know it's a pretty loaded question, even though it's a very simple one, but I think it's really important that our listeners get an understanding of what it's all about.
No, it's a great question, I think, because it's important to articulate actually what is the purpose of it. Not only how does it work, but what's the main value a software around carbon management, carbon accounting is trying to offer. And so I'll offer a couple kind of categories here. So the first is it's a unified data system to centralize all of the data and emissions calculations associated with the carbon footprint and beyond carbon too. ESG metrics are often a big part of these disclosure frameworks. And so, beyond carbon, important to be in one place. But I think the kind of biggest upstream challenge to to tackle that software can do well is getting data from diverse business systems into that one place. And so really this has been the 80% time suck for so many companies is they've got utility bills and they've got logistics documents, they've got financial documents, they may have inventory information about what they're purchasing, procurement systems. I mean, just a wide range of systems that maybe all had their own export schemas in terms of what the data looks like. And so getting all of that into the right format needed to calculate emissions is historically a massive challenge. And so using clever tools like direct integrations into those systems themselves, doing the kind of midstream work of putting that data into the format needed to calculate emissions, even things like automatic document processing and AI tools to interpret the meaning of utility bills or fuel invoices, waste receipts, whatever you want to throw at it, or reading spreadsheet formats and whatever they look like at their origin rather than requiring manipulation. So really addressing very granularly, getting in the weeds of that messy data and all its glorious diversity is a real key differentiator among carbon accounting platforms. But then perhaps most basically, in the next step, really, importantly, having belabored that data collection step, is the calculation. So back to our thread a moment ago, applying and understanding what is going to be the most defensible conversion from that raw underlying utility data or logistics data, miles traveled, to an emissions calculation. And that historically involves choosing among different databases of these sorts of conversion or emission factors from places like UK's DEFRA or the US EPA or proprietary academic sources, and among many others, but kind of doing that matching and inference for you so that you don't have to worry as much about that sort of methodological step, while crucially maintaining that transparency that we spoke about at every stage of that calculation. Maybe two more I'd mention, and these aren't present in every software solution, but are often really helpful, is one is the kind of reporting layer that we talked about. So it's fine and great to have the final calculations, but how do you actually get from there, those sort of raw calculations, to what's actually a usable disclosure or reporting output, and acknowledging that so many of these outputs look somewhat different depending on the reporting scheme or disclosure structure framework. I think the third major area is really getting then from those calculations to a usable reporting output. So making sure that there's not going to be a lot of additional work you have to do as a team to get from, say, scope 1, 2, 3 emissions and information on net zero planning and other kind of ESG metrics to the formats required for different regulatory or quasi-regulatory reporting frameworks, which, as we covered a little bit in the last episode, all look a little bit different and ask for different ways to slice and dice the data. So making sure that reporting analysis layer is key. And finally, and I think maybe most excitingly from the business value perspective from the last episode, is actually understanding, okay, well, this is our data as a starting point as a company. This is where we sit now, but what does this mean from a potential optimization or energy reduction, emissions reduction perspective? And how do we get very specific about, who are going to be the vendors in our area that could help us maybe take action on some of these projects that might be looking compelling for the company, and doing that initial scoping on the carbon and cost implications of those measures, and really that much more proactive stance to accompany the data aggregation, calculation, and reporting steps.
And they're obviously all key steps towards being able to demonstrate with confidence the credibility of your data. So that's becoming, more and more apparent when it comes to organizations having to prove, what they say is actually correct, and that the data has been independently verified by, an independent accredited verification body. And that's an area that I've definitely seen a trend in. Obviously, I'm wearing my verification body cap now as CEO and founder of Carbonology, where we're seeing a huge increase in markets driving this, as well as the regulatory requirements for verification. So why do you think then that verification is becoming increasingly important?
I think you hit on the two major themes we see as well. Is first, for many, there's not a choice anymore, and that they've got to actually, as a consequence of maybe falling under California's emissions disclosure rules or in the EU, the corporate sustainability reporting directives rules, they've actually got to have, in the first case, limited assurance and then ramping up to reasonable assurance in a few years on these numbers. And so for many, this is the first kind of key driver for getting the assurance engagement underway. But I think that some of those firms who have to, but also some who don't have to, are also finding, as you said, a real value of this, that, it's sort of, if you've got the carbon information already, if this is something you're confident enough to put in public, then having that verification, I should say, is actually the engine for giving that confidence for putting it in public. And many companies we find maybe do a first couple, dry runs on their carbon footprint for a few years or cycles to start with. And then really once they've got that assurance confidence, having gone through that process, then it's something they'll be happy to put in public and in various company reporting dossiers, et cetera. And so it's a real catalyst for that confidence as well.
So, Joe, looking at it from a practical point of view, what practical effect do you think this is having on carbon accounting, measurement and reporting?
Oh, a couple. I think, one just from sort of an organizational company sort of sociology perspective, I think it's been very interesting to see the rising role of verification and assurance for sustainability information really cause a shift in the way, sometimes even where sustainability lives in a company, sort of departmentally. And we're seeing a big trend of increasing overlap between sustainability functions and more traditional finance functions, financial reporting functions, or sort of general counsel departments. And even the rise of a role like at bigger companies, like an ESG controller role, and really having that rigor around data and calculations and reporting infrastructure for sustainability information has been a very big practical effect, I think, of these trends. And then there's the more obvious ones, perhaps, of just increasing focus on transparency of source of where data is coming from, clarity of calculation at scale across the footprint, and really not sacrificing that anywhere in the footprint and the reporting apparatus is a real key.
Yeah, we're definitely seeing that it's not just, one individual's responsibility to be able to provide all of the data when it comes to verification. Just to kind of unpack the verification process and how that fits with different teams and also the carbon accounting software. Typically, what we're seeing is that once the scope and boundaries have been determined, it's then a case of, planning, for the verification agenda for stage 1 and stage 2, the key players that are involved. So it could include a representative from finance, from facilities, from operations. It could also be a representative from, let's say, a business travel company. If business travel is one of those key areas where you're finding that that's one of the most significant environmental aspects and therefore impact for your organisation. Although it's generally an ESG team that does bring that together, it is very much a team effort as far as we can see. And looking at your scopes 1 and 2 emissions, then down to the scope 3 emissions, which I know we're going to be covering in more detail on the next episode, Jay, and I'll be picking your brains on that. But yeah, that is key. But it's the carbon accounting software that's like the glue that pulls all of that together, really. That is that engine to be able to extract all the key information and being able to trace back in terms of the sources. And actually, what we're finding is that more often than not, the person who's ultimately responsible, for that carbon accounting software within the organisation, that is really crucial in the verification process as well. And in some cases, it could be a consultant that's implemented the software for the organisation, and they could be a sustainability expert that's working alongside and in collaboration, with the company. So it doesn't mean to say that it's just one individual's responsibility. Generally speaking, it is a bit of a team effort, and I think that's a good thing in terms of embedding carbon accounting, across an organisation's culture. I think it is definitely a shift that's moving away from just like one individual's responsibility to the organisation's responsibility. And it's great to see accountability in lots of different areas across a company. Are you finding that, Jay, when it comes to your clients using carbon accounting software and using platforms like Gravity to basically act as a catalyst across departments and functions in order to be able to demonstrate to a verification body exactly what the methodology is and the data, that's been derived.
Yes, I think a similar trend, and I think the emerging best practice we see, especially at bigger companies, is there is a core individual or small team who are kind of responsible for, I was going to say quarterbacking, but that's more the American football expression. But no, the real football, sort of European football equivalent would be, forgive me, but being that coach, if you will, of really kind of understanding where all the pieces fit together and who has access to what knowledge and data. Because again, at these bigger companies, nobody knows every piece of information that may be important for measuring or verifying a carbon footprint. But I think also important to make sure that as other teams are tapped in, that it's more, integrative rather than additive, or not just spreading the burden around. And I think sometimes that's been a risk in earlier phases of companies approaching this work, is that it just spreads the work around and enables teams to spend much more of their time on this than maybe they would want to otherwise. And so making sure that we're thoughtful about organizing the engagement so that it's efficient and people get what they want and we have the information where it needs to go, and value can flow the other way, but not engagement for engagement's sake is, I think, a trend we've been seeing.
Yeah, I think it certainly helps in terms of risk mitigation to, remove that single point of failure. Because obviously, in terms of verification, that comes around every 12 months. And, more often than not, people come and go within an organisation, but it's the systems that remain and it's the systems that improve, and the quality and depth and breadth of data improves year on year. And it's being able to have access to that is absolutely crucial. It's becoming business critical that there is that resilience built into the data reporting within an organisation, regardless of, whichever individual is ultimately responsible. It needs to be embedded into the organisation's systems, I think.
Yes, yeah, exactly.
Yeah. Okay, great. Well, I think we've covered off, how carbon accounting software and verification can work together for climate compliance. So thanks very much for your thoughts and certainly your experience shared here, Jay. That's been really helpful. Thank you.
Absolutely. Pleasure to be here.
Great. Well, the next episode and the last one in this series on platform to proof is going to be covering the all-important value chain emissions and how to get started with your Scope 3 emissions. So, thanks very much for tuning into the ISO show today. If you'd like to find out more about Jay and also Gravity, and potentially, this might have sparked your interest in carbon accounting software and you'd like to find out more about it, then I'm sure that a member of Jay's team will be more than happy to take you through like a demonstration for you to be able to get a better understanding and how that could work for your organisation. So we'll include a link to Gravity's company and contact details in the show notes. So whenever you get an opportunity, you can just hop on there and take a look at that in more detail. So thanks very much for tuning in, and I look forward to catching up with you on the next episode of the ISO show.
Looking to use ISO standards to drive better business practice? Contact us at blackmoresuk.com to access further information and book your free 15-minute call.